The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Ardor SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. We have a very special guest for you today from Sacramento, California, Stefani Boyd. She is a mortgage broker and is going to work with us today on explaining how to get the best rates and maybe how to go from renting to buying. How are you, Stefani?
Hi, Tim. Thanks so much for having me.
Oh,
I'm great.
more than happy. Yeah, exciting time in mortgages right now.
Yes, it's not for the faint of heart. That's for sure.
So tell me, we talked a little bit before. We've talked a couple of times, as a matter of fact, and I think everybody would be interested. Let's just start at the beginning. How did you get started in mortgages and real estate overall?
All right. Well, let's rewind to about 2000. So, my mom actually started in real estate in about 1985 in appraisals. And then in about 1990, she got into mortgages and figured out how to do that while I was figuring out how to do criminal investigations with the county public defender's office.
Wow.
So I did that for about 5 years, went out interviewing witnesses, representing defendants, trying to make sure both sides of the story got told. And eventually, that became pretty depressing, quite honestly.
Yeah.
It's the seedy underbelly of life in the criminal defense world. So I got my real estate license in 2000. And back then, there was no such thing as a loan license. So if you had a real estate license and an inclination to learn how mortgages worked, you could just go ahead and do both. It was like the wild, wild west. And consequently, we ended up with the 2008 mortgage disaster. We were basically doing whatever our lender reps told us to do. They would come in and show us a new product, and we'd be like, great. You can go up to 125% of your value. That sounds perfect since, prices are just going up and home values are appreciating indefinitely. And then we saw the crash with the subprime mortgages and everything. So at that time, I and a lot of my colleagues in the office went and got our massage license. We decided that massage therapy was much more relaxing type of job to have. So I did that for a few years after the crash. And then in 2015, I decided to jump back in. Things were looking up. Got my mortgage license a couple years after that. And here we are now on the precipice of a whole new unknown adventure in mortgages and home purchasing.
Yeah, for sure.
So everybody's heard about the Fed raising the rates again and again and again. I think we just had the 6th rate hike this year.
Wow.
I know the Fed meets 8 times a year, so I'm pretty sure they're meeting 2 more times, and this was the 6th one. And so far, we've gone up about 3.25% to 3.5% over what we were at the beginning of the year. So, yeah, unfortunately, the end result of that is obviously housing is getting less and less affordable while the cost of everything else goes up. So that's the real big conundrum we're all in, is how to buy a house in this market. We're all noticing more inventory. Anyone who's in real estate knows that, depending on the market, of course, but I think this is generally true across the board, that we're seeing more inventory, longer times on the market before things go pending. Prices coming down, sellers making concessions that they were absolutely not making a year ago. We're seeing a lot less bidding wars, fewer we're still in my market here in Sacramento, we're still seeing multiple offers, but I think the last stat I saw was more than 60% of the pending sales in the last 30 days had a price reduction.
Wow.
Maybe 69%. And, depending on the price point, you may see a $5,000 reduction, or on these $1 million homes might be seeing $100,000 or $200,000 reduction. So things are sitting longer, buyers are fighting over them less, and sellers are starting to make some concessions to try to get somebody in there.
Yeah, for sure. Interest rates aren't helping them out too much. I know it wasn't that long ago, it seems. I mean, just when we say, I was looking at the Fed calendar as you were talking, and it said the next meeting's in November, 1st and 2nd. And I just remember thinking, November? What happened to this year? So yeah, I mean, having so many rate hikes in 1 year is rare. Even though I think historically, I'm old enough to remember, the 17% interest rates going back into the 80s, and it's like, so I still feel comfortable, but it's so hard when they raise them, at that rate, at that speed, that it doesn't sit well, right? Because you could be building a home January 1, and if you don't lock in, a rate, and then come around to December, it takes a year and a half to build a home, at least build a home, not necessarily, buying something that's in already on the ground. But a lot of folks, their heads are spinning, right?
Oh, yeah. We're seeing a lot of the new construction lenders who work with those builders specifically. They're offering 6-month rate locks, low rates, lower than industry rates. I'm not sure exactly how they're doing that, but I guess it comes out of an inflated value. I mean, the money all comes from the buyer eventually, right? It comes out of the purchase price. So yeah, they're offering $10,000 credits towards the closing costs and a low rate. But the thing is that I'm seeing is we're still having supply chain issues. So when you get your projected completion date in February, realistically, that house might not be closing until July or
for sure.
More.
Yeah.
So, I've seen all kinds of things from sliding glass doors being delayed or just unavailable to, plumbing, piping, fixtures, you name it. There's been some type of interruption in the past year or two in the supply chain with building homes. So
I know windows is a big one. I mean, you said sliding glass doors, but even just regular, paneled windows, something that simple that you feel like I could go to Home Depot and buy that, but no, you can't. No. You can't.
Home Depot's changed a lot over the pandemic too. Things that are just so regular that you take for granted. You go there and you're like, wait, what?
Can I get a brick?
There's no garden stakes. There's no just weird things I remember looking for over the past year. But real quick, I do want to go back to that 1980s scenario that you mentioned, because I talked to my mom about this a lot, and her house was $75,000 when she bought it in like the late 70s, and probably retained that value for quite a number of years, because we haven't seen appreciation like this. We didn't see home prices appreciating at this rate. So while your rate may have been 17%, your purchase price is $75,000. I mean, even fast forwarding to the late 90s here in Sacramento, my brother bought a house for $32,000 that is now worth $600,000. Wow. My mom's house that she bought for $75,000 is now worth over $1 million.
Yeah, that's
so. We've got like this 1,000% increase in the cost of buying a home. So while the rates are still technically low, over that large of a purchase price, I mean, my first interest rate was 7 3/4 in 97, but my house was only 100,000. So that house now is 700,000. So, for example, another thing, I was looking at a scenario here, a purchase price of, where did that go? 650 was the purchase price I was looking at a year ago at a rate of 3.25%. And their payment would have been 3,600. Today, that same house at today's interest rates, the payment is $1,000 more.
Wow.
So just for perspective, that
Yeah.
you know, so.
And what was the time frame on that? You said 1 year. Was it 1 year? The difference?
1 year, yeah.
Oh, wow.
Last summer I was looking, maybe late spring, but yeah, roughly
Yeah.
1 year. So now that buyer can get that house, right? Because we were out competed in this particular scenario last year, where there were crazy offers, 25 offers on every single house for 100,000 over the asking price, cash. There was just no competing with this particular VA loan.
That's crazy.
So now that house has even appreciated in value, maybe like, I don't know, 5 or 6% instead of 18% like it was.
Right.
Over the past few months. So that same house might be 660 now instead of 650. But I mean, you're going to count on paying $100 or $1,000 more for your interest rate.
Yeah.
So
that's just crazy.
Yeah, it is crazy. And wages haven't increased 1,000% since the 70s or 80s. We're talking like maybe 300%. I think minimum wage was, my first minimum wage job was like $4.25 an hour or something.
Oh, yeah.
And now it's like 14 or 15, Yeah. So that doesn't compute. And then you add in all these costs for gas and, renters and young people are having a real challenge these days. The rents are going crazy, and
rents are insane. I mean, I'm sure California is similar. I'm in Southeast Florida, between West Palm Beach and Miami, and we've seen just in the past 6 months almost 100% increases for some rent rates. And so let's talk about that real quick. I think that segues right into another area that you're very proficient in, and turning renters into buyers, right? So walk me through that, and being that we're having this insanity in rent prices. I mean, what should we be doing for those people who are still renting?
Well, so here's the thing to keep in mind about rent is that 100% of the time you're throwing your money away. I mean, you have to pay to live somewhere. And when you're renting, you're paying your landlord's mortgage or sending their kid to college. So, historically, over the years, as recently as a year ago, it was cheaper to buy a house than rent. And when my son and daughter-in-law came and said that they were thinking of moving because they wanted more space and they were going to rent, and that involves, first and last, a deposit, security check, all this, you're looking at $5,000 or $7,000, to move. And so I was like, why not just buy a house? Rates are great. Zero down, down payment assistance. You can actually buy a house with zero down, where you can't move into a new rental with zero down. Right. So, and in fact, it was cheaper with interest rates last year for them to buy a house than it would have been to rent a comparable house. So the challenge now is that renters, you may be able to find a rental for less than you can own, but we still go back to that 100% of the time you're throwing your money away kind of thing. Right. So you may, it may be more of a stretch to make that mortgage payment, but when you do that, you're, securing your own future. You're paying for your own equity. You're building your own security. So a lot of lenders are coming up with more incentives to get buyers into a house, implementing new programs like this zero down equity builder forgivable down payment assistance. So in California, and there are down payment assistance programs that work through states. This particular down payment is specific to California, but there's several that are, available in almost every state.
Right.
But what the California Housing Finance Agency has decided to offer is a 10% grant to go towards your down payment and your closing costs.
Okay.
And it is 100% forgivable if you stay in the house for 5 years.
Oh.
And so each year, 20% of the grant is forgiven. And so once you get to the 5th year, 100% is forgiven. So, you know, on
is that 10% of market value or your purchase price?
Purchase price or appraised value, whichever is less.
Okay.
So, yeah, you know, if I've worked in my market in Sacramento, the income, so the catch is the income limit. So the income limit is, I think, 80% of the median income. So we're at 81,000 is the income limit for Sacramento for this program. So if you have no debt,
right,
and you know, no car payments, no credit cards, all that stuff, a 640 credit score, you could go up to about 400 to 450. I had it maxed out at 500,000, but I hadn't run this scenario this morning, and the rates went up 3/4 of a point last week. And so, you know, it might be capped at around 400,000 now based on the rates. So this program, it does pay for itself through the interest rate. So that's where they get this free money. So you do pay a slightly higher rate, but it's pretty close to an FHA rate, basically. So, you know, I would expect the rate to be comparable to the going rate, which when I looked at the internet today, it told me it's 6.59%. But of course, then you have to factor in your loan to value, your credit score, your this and your that. And I actually priced one out at 6.25 today with no points. So if you want to, you know, pay fees, you can get that down a little bit more still. So I would say that 6%, 6.25 is probably where we're at with this down payment program.
Yeah, that's not bad for a first time buyer type situation, right? That's not bad.
Right. But, you know, a year ago, this same institution was offering a different down payment assistance program with a rate of like 3.25. So it hurts the pocketbook when the rates double overnight.
It does.
You know, and then it's just, we're seeing more, I mean, a lot of young people really don't make 81,000 a year, right?
Right.
I mean, my son and his wife together do, but by themselves, neither one of them do. You know, they both make, you know, closer to 50. So at 50,000 versus 81,000, you're going to qualify for a lot less house. And in Sacramento, there really isn't much under 400,000. We're starting to see a little bit more in the, 350 range. But it's hard. It's rough everywhere.
It really is. It really is. One of the things that that I know you talk about a lot as well is you were talking about FHA loans, and you and I in the industry understand the different types of loans and things like that. But talk about the veterans, the VA loans. With interest rates doing what they are, the VA will guarantee the loan. But talk about VA loans and what it takes to qualify for that.
Okay, well, I love talking about VA loans. I actually have my youngest son is active duty in the Air Force right now. So I am a proud Air Force mom, and he's excited about using his VA loan in the future.
Right.
So our veterans, there are certain rules around, your time in the service and this and that. And basically it starts with your certificate of eligibility. So the VA determines how much you're actually eligible for and how much they're going to guarantee. And there's been some really exciting changes recently with VA loans, namely that they no longer have loan limits. So they used to more kind of line up with conforming loan limits.
Right.
And now in California, and I do believe this is nationwide because I talked to someone who bought a high balance VA property in another state recently. And so you're able to get in if you have a high enough credit score, no loan limit, 0 down. If you have like 700 plus credit score. If you have a lower credit score, they might make you put 10% down. But the VA, one of the biggest benefits of this loan is that there's no mortgage insurance. So they offer you up to 100% of the value. So you're coming in with 0 down. You're still going to have closing costs, but in this market, we're seeing sellers pay a lot more closing costs. So you could literally go into a VA scenario with 0 out of pocket, minus your appraisal and home inspection, things like that. And so VA offers this benefit of no mortgage insurance, basically because they know that the military has trained their veterans to pay their bills on time, and they feed it into them for 3 or 4 or 6 years, that you must maintain your good credit and make your payments on time. And plus, they're very careful with their calculations, debt to income, and they make sure that you have, a certain cushion to live on, basically. They calculate more into your debt to income ratio. So FHA offers you high loan to value, but you pay a significant amount of mortgage insurance. And even conventional loans will go up to 97% with a 3% down payment. But the mortgage insurance is based on whatever percentage you go over 80% loan to value. So if you're able to put 20% down, you won't have mortgage insurance. Except with FHA, you'll have it all day long. No matter what your LTV is, FHA is going to charge you mortgage insurance. So there's none of that with VA. VA tends to stay on the lower side of rates too. So we are able to offer veterans a great interest rate and 0 down payment and no mortgage insurance.
Wow.
And now no loan limits. So
yeah, that's nice.
Yeah, I recently talked to a veteran who's looking at a fourplex. You can actually buy a duplex or a fourplex with your VA loan, and then you can use the rental units to help your income qualify.
Offset, yeah, that's nice.
Yeah, that's really cool. They have some rules attached to it based on your credit score, whether you've ever been a landlord before. They don't want anyone to just go into a $1 million fourplex that they've never managed, tenants and get in over their heads, having no idea what, so they have some pretty stiff rules attached to them and guidelines, but
are the income qualifiers for something like that, like on the fourplex, are they the same for a residence, individual residence, the income qualifiers? Because you said they take into account the potential rental ability or rental.
Right. So they'll give you credit for 75% of the market rent on the rental units. So basically it's the same. You're going to calculate your debt to income ratio, based on your mortgage versus your income, but then you get to add in the rental income up to 75%. So if it's, a duplex and the rent's $1,000, you're going to get $750 credit towards your mortgage payment. So, if your mortgage payment is only $2,000 or whatever, and your tenant is paying $1,000 of it, it's a great way to get yourself into a real affordable situation if you have duplexes available in your market or fourplexes. They'll let you go up a triplex or a fourplex as long as they're all attached. They're not like, 4 little tiny homes on one property or something. But
full-blown apartment complexes.
Right. So, but then if your mortgage is $10,000 and your tenants are paying $2,500 a piece, so they're paying $7,500 now. Your portion of maybe your income is only $5,000 or something. You get to use all of that rental income to bolster your numbers. So now you can qualify for a $10,000 mortgage payment.
Yeah, nice. I like that.
Yeah.
So anyone who wanted to get in touch with you, Stephanie, what's the best way to get in touch with you?
I'm at stefaniboyd.com on the internet. And I always answer my phone to people if they want to give me a jingle at 916-215-9811. I've got first time buyer's guide. And you can access it at firsttimebuyershandbook.com, and it bumps you over to my Stephanie Boyd website where you can see the calculators, fiddle with your income numbers. It kind of gives buyers a tool to be able to, calculate their own situation and just get an idea of whether they need to go out and get a co-borrower. Maybe you get a roommate, maybe you get a new boyfriend, maybe you hit your mom up to be a non-occupant co-borrower.
Yeah.
So you can kind of get a good idea. A good rule of thumb is 45% of your income can go to your housing expense, 45% of your debt. So the lender doesn't want to see you with a 45% housing payment and then 25% bills, because now you're at 70% debt to income.
Yeah.
So, the calculator shows you where to plug in your car payment and your credit cards and your income, and then kind of runs you through the scenario to calculate how much roughly you could possibly qualify for.
No,
and then hit me up and I can run the real numbers and we can have a real conversation.
There you go. Well, I'm going to let you have the last word. If there's anything you want to talk about that we didn't cover, or some people like to talk about their favorite, their favorite pet. It doesn't matter, or you can talk about mortgages some more. Up to you, but have the last word.
All right. Well, I appreciate that. I'll just leave on a note of advice, I guess, for anyone out there that's struggling with buying a home or being a real estate agent in this market. I would just say, A, never give up. And B, if you're the smartest person in your friend group, go out and meet some new friends who are smarter than you.
I love it.
A lot of people want to be the smartest person in the room, but you're not going to learn anything that way.
I love that.
So
yeah,
never stop learning from other people and get some good knowledge out there.
Awesome, Stephanie. I appreciate it. I look forward to talking to you again. It's been a great show, and maybe catching up here soon and talking about where interest rates are then.
I would love that. Thank you so much for having me, Tim. I appreciate you taking time out of your valuable day to talk with me today.
No worries. Have a good one.
All right. Take care, you too.